guys. Today will be analyzing with you the two main American indexes, so the Nasdaq Composite and the Dow Jones Index. Both of them have a similar charts, with the exception that Dow Jones we can detect a double top on the Dow Jones Index, while we don't see the same double top on the Nasdaq Index. In both cases, we see a bearish divergence on the main indicator like MACD or the Relative Strength Index. In order to do so, to try to predict the future of both indexes, we might use the COT reports, the commitment of traders reports, which allows us to have a more in-depth info, a more in-depth view about the possible outcome for both indexes on in the next few months. However, I have to say that actually today is 1st of December. We don't have enough elements to understand if we might have another leg up, or if we are at the beginning of a bearish trend. This is because we don't see new lower highs and new lower lows on both the indexes. So when we analyze the daily and the weekly chart, while for the Nasdaq we have seen a higher high, and we haven't seen for the Dow Jones, because there we have detected a double top. However, so while in both cases while for the Nasdaq we have a higher high and we don't have it for the Dow Jones, however we don't have lower lows for both the indexes. So we have to wait. Once we will have this data, once we will see the beginning of bearish trend, then we can clearly say, okay, the multi-year bullish trend is over, and finally the bearish trend, the downtrend has started. So what the commitment of traders can say to us? The commitment of traders report is released every Thursday of the week. I've been checking on it, and I have to say that there is again a big uncertainty, because the large speculators, large traders, okay, so the strong hands are closing both the trades, both the long and the short, and they are in any case above the zero. We know that large traders are trend followers, so they tend to buy in uptrend, they tend to sell during a bearish trend, during a downtrend, while the commercial are exactly at the other side of the market. The commercial are below the zero, okay. So what we expect to see is, when we see two different extreme data, so when the large speculators are really high and the commercial are really low, then we expect a change in the trend. However, now we see that both the large speculators and the commercial have closed their trades. So what we can do is, since we cannot collect enough data to understand about the near future for both the indexes, we understood that December cannot be somehow a month which can give us a clue to see what it might happen in 2019. So what we can do is to have a look to what the small traders are doing. Since small traders are losing money, okay, for the 90% of the time, if we know, for example, that small traders, like in this case, are long, okay, as a contrarian indicator, we might want to be short in order to make money. However, now the situation is really uncertain. We have to wait until January and February. I will not give too much attention to the meeting now between Putin and the Chinese president. because we might see some trap, so a bullish trap, a bull trap, or a bearish trap, a bear trap. So we have to wait till January and February, and we have to see. In any case, the chart, the monthly chart for the Nasdaq and for the Dow Jones is starting to be vertical, which is a very negative signal. We have seen an engulfing bearish, so the last month, and we have seen a lot of an increase in volatility, which is again a bearish signal. But again, the MACD, the fast moving average for the monthly MACD has crossed below the slow moving average, which is again another bearish signal. Most importantly, once we compare the MACD, okay, the amplitude of the MACD, and now I'm talking about the monthly MACD with the amplitude of the MACD, the monthly MACD before the crisis in 2007, we see that they arrived to the same level, to the same extreme, which is so if we take as a contrarian indicator, this can be an alarm that should warn us that we might be really close to a beginning of a bearish trend. Then there is another extremely important indicator. Historically speaking, now earnings against price against earning. Now in 2018 the average was 30. In the history of Nasdaq and the history of the Dow Jones, it happened only once, okay? And guess when? It happened before 2000, okay? So before the collapse of the internet bubble. So there are many interesting indicators which at least should make us think. So my idea, okay, in December we might see the market going up. So now is a 50-50 situation. We will know more most probably next week. Let's see the opening of the market on Monday. However, if we might see a market going up in December and or at the beginning of January, that could be even better for me, as I want to short the market, and I am short with several stocks. I'm not fully short. I have some long position. But again, there are many indicators which are giving to me the idea that we might be close to the end of the multi-year bull trend. Especially, you know, price against earnings equal to 30 is something that we have seen again only before 2000. When the market crashed because of the internet bubble. So let's be really careful with the market now. So for those who are eager to buy stocks, I would say, okay, maybe you can buy, but try to short something else. Maybe the weakest stocks that you can find for the American market, for example, General Motors, which is in trouble. But again, I expect something big for 2019, and let's see. It will be really interesting. I'm not, you know, if we have a look to the Elliott wave analysis, we know during the uptrend we have 5 waves: 1, 2, 3, 4, and 5. The wave number 3 is always the longest one. We should be at the end of the wave number 5, which is the last one of the multi-year uptrend. And you know, after the 1, 2, 3, 4, 5, we have the A, B, C. Okay, so the first wave of retracement, the A, then we have B, which is closing above the wave A, and then the C, which is the actually when the market normally collapse. Then of course it depends if we were studying the 4-hour charts, if we were even look to the daily charts, the weekly or to the monthly charts. However, what I'm quite sure that we are, well, I'm more than sure that we are experiencing the last wave. Of course, what I don't know if this last wave, the wave number 5, will be extended for a few months more or not. We will know as soon as we will see lower lows. Again, for the Dow Jones, we have not seen a higher high. We have seen a double top. We might see a triple top. It could be possible that we can see in December and January one leg up till the maximum, and then again going down. It's really interesting that at the beginning of the new year 2019 we might know more. Actually, if I have to bet about the direction of the market on the next 6/12 months, I will say that we're 70 to 30 or 80 to 20 that we are going down. Again, now analyzing the COT report, we have seen that it can be 55 to 45 long, so the market might raise next week. But really, it's a really tight fight at the moment. There is a lot of uncertainty. And in any case, every leg up becomes an even better opportunity to short the market. It cannot be forever. We know that based on a contractive cycle, we are already this, the 9th year. We should be at the end of the cycle. Of course, when you read articles around of many analysts, they are always optimistic. I don't know what they make them so optimistic. It's like for them